You're watching the Mortgage Busters show, and you know this show is all about paying off your mortgage as fast as possible, but also preparing for retirement. Rain, welcome back to the show.
Thank you, Greg. It's lovely to be back.
Very good. What have you been up to? What have you been doing?
Well, Greg, we've had a flood of inquiries from our viewers asking for help.
Absolutely. So, in what context? Like, what's, are people inquiring about the thumbprint report?
Yes, actually, funny enough, they are inquiring about the thumbprint
Can
report.
you elaborate on the thumbprint report?
It would be my pleasure to elaborate on it.
Please go on.
So, basically, what it is that it's something that we're doing as part of our community service because we are airing on Channel 31.
Of course.
And we are doing these shows for you, our dear viewers, the community. So as part of the extension of the service, when people call us and ask us for help, saying, the Mortgage Busters show, please help me, we actually respond to their inquiries, and then we come and see them in their homes in order to take a financial snapshot, just a general financial snapshot of what is going on in their lives right now. And then we take it away, give it to one of our finance guys, and he gives us some recommendations on how to help these people to move forward and take hold of their financial destiny.
Fantastic.
Yes.
Now, we always, at the end of the show, we always talk about the thumbprint, and it's always sort of rushed, and we give out the number, and it's very quick. But this is good a thing to do now because I want to elaborate, or for you to elaborate on the thumbprint. And
yes.
Like, is it a big document? Is it just tell me more about it.
Okay, actually, it's very simple. So all we do is we look.
Well, actually, the first question I should ask is it for free?
Yes, actually, Greg, it is for free. Again, it's because this is something that we are giving our viewers as part of our community service and our obligations to Channel 31. So this is something that we give for love to all our viewers for free. It doesn't cost them a single dollar, and they are under no obligation to action anything from the report. It's actually a very simple report that talks about, I'm going to use some technical terms now, guys, assets and liabilities. Basically, the things that are working in your favor and the things that are not working in your favor. We take a general financial snapshot of everything that's happening in their lives, and then we give them recommendations, literally step-by-step recommendations on how to move forward. Now, of course, we hope that the people that have this report, this beautiful bound report, will take it seriously, because if they don't, then it's all about your lives, guys. So if you do not take it seriously, you will go nowhere. And then it's either sink or swim with your finances. Do you take charge of it or not? Great?
Of course. Now, what I'm still thinking about is you mentioned the word love.
Yes.
And there isn't enough love in the world.
Oh.
True?
Yes,
True?
I find that.
We can talk about finances and talk about property and talk about equity and paying down your mortgage and
Yes.
credit cards and blah, blah, blah. But at the
Yeah.
end of the day, what is there? Love. So I'm glad you mentioned that. But, we do things out of love, of course, but, we've got a commitment to Channel 31.
We do. We
right?
do have
And
commitment.
we see everyone that calls into the show.
Yes, we do. Every
Okay.
single person.
Exactly. So what happens next? Like, if someone wants to take this further, how does that happen? Or how does it happen?
It's actually very simple. All you need to do is go to our website, tmbshow.com.au, and send us off an email, or you can call us, which was even simpler. Just pick up the phone and dial 1-300-862-746. And again, that number is 1-300-862-746. And one of us will get back to you as soon as we can.
Well done.
Thank you.
Excellent, mate. So let's talk about what's happening in the world.
Yes.
Right? Now, there's a lot of people in the world right now.
There is.
And there's going to be more.
Isn't there 7 billion people in the world?
Almost 7 billion.
Wow.
Correct. So 2013, which was the last census, right, in Australia, we had around 23 million or so. Okay?
Yes, there was.
And 2016 is 24 million.
Yes.
Right? Around 24 million or so.
Yes.
Maybe one or two less, right?
Mm-hmm.
And 2025, there's going to be 27 million people.
Wow, that's
right?
a whole
Which
extra
is
3 million people, guys.
That's a lot of people.
Where are we going to put these people
that's
in
another
Australia?
city. That's a big city.
It is.
Right?
It is. It's bigger than Perth and Adelaide.
Absolutely. And in 2050, the forecast is 35 million.
35 million.
35 million.
by 2050.
So that's pretty much a third more of the population that exists right now.
Wow.
Now, that's telling us that Australia is going to be a popular place to live in.
It is already a popular place to live in, folks.
So, that's got to be accounted for.
Yes, it does.
And so people have to, in terms of future events, future lifestyles, future, population density, all that sort of stuff, that has to be prepared for.
Yes, we do.
And that's what we talk about, the Mortgage Busters show, paying off debt, good lifestyle, retirement, so on and so on.
Absolutely.
So, you've got to prepare for the future. So how do you factor those numbers in?
The first thing that people need to do is honestly take control of their finances. The faster and more accurately and more efficiently they can understand and know what is going on in not just their lives, but their finances, the better it is for them to factor and take control and strategize for the future, to plan for it.
I love that word, strategize.
Yes.
Because most people don't strategize.
No.
So people, the average person, mum and dad that both have to work these days.
Mm-hmm.
So they're both working. They're maybe they've got kids. They've got to put into before school program, during school, after school care.
Oh,
then there's the
so
weekend.
many.
They're busy, sports, blah blah blah. Life,
Yes.
the lifestyle
Life
is
in
very
general.
very busy.
Yeah.
People are working harder. People are doing a lot more activity in terms of coping up with or coping with lifestyles.
Yes, it's true. You know that Australians actually work some of the most overtime in the world?
Correct.
Yeah.
Yeah, I know. I'm not sure why that is, but people are very, dare I say it, materialistic, right? And they want more, and I get that. That's okay, but you've got to consider lifestyle after retirement.
We've got to consider lifestyle before, during, and after retirement,
Correct.
Greg. Because you cannot afford to wait until after or just before retirement before you start planning for it. Because guess what? It's too late. You've got to start before. When? Now. Now is always the best time. And it's not necessarily always going to be too late. You can always do something with your finances.
So be proactive.
Absolutely. Be proactive.
All right, well, we have to go to a break.
Okay?
So you're watching the Mortgage Busters show. We'll be back directly after the break. You're watching the Mortgage Busters show, and we're back with Rain Lou. Rain,
Greg.
talk to me about good debt and bad debt.
Right, Greg. It's actually quite simple. Good debt is money that makes you money. But bad debt is money that doesn't make you money. That means money that costs you money. It's like going out into the water, taking a bucket of just green notes and red notes and whatever notes we have and just throwing it out into the water.
Oh my God, it makes me feel ill. I feel ill.
But it's literally what it is. Money that costs you money and doesn't make you money. That's what bad debt is.
I'm reminded of my Uncle George. Yorgo.
Uncle
My
George.
Yorgos. It was an uncle great or a great uncle. I'm getting
Yes.
tongue-tied.
Oh, wow.
And I remember when I was like 12 or something, and he said, "Remember, the money makes the money." And
Yes.
I've never forgotten that.
Wise Uncle George.
Yorgo. But I remember it. The money makes the money.
But it's
true.
true.
It's so true. I know.
It's so true. If your money isn't making you money, that's what's called bad debt. Things like personal loans, car loans, boat loans, credit card. Did you know that once you spend that money, it'll actually take you 10% more effort to get every single dollar back?
And that's a chunk.
It is.
But, who doesn't love the smell of a new car? A brand new Commodore or a brand new BMW, but how long does it last for, 12 months maybe?
Maybe
Yeah.
2-3 years.
Before you know it, there's chips under the seat and, who knows.
The kids have got candy stashed underneath somewhere.
Exactly.
Yeah, the super
So what's
secret
that all
hiding
about,
spot.
Well, why are we so possessed about, new things and materialisms and you know, like just stuff.
Maybe it's because we need more love in the world.
I
right?
love that. Yeah.
But also, did you know that once you buy a car and you drive it out of the car lot, it's literally depreciated by 20%?
I know, it's amazing.
It is, isn't it?
And that's you pay for that privilege.
Absolutely.
Yeah.
People do, and they do not realize that every time they do it, they lose 20% straight away, and they'll never get it back.
So, you know, really, if you think about it, most people should go out and buy a car that's a year or two old. Right?
Well, I would encourage people to at least look at demo models if they want to buy a brand new car. Then it's still new, but then at least it's not costing them quite as much. And the most important thing is maybe look at avoiding buying new things at all if it's not necessary. Of course, you've got to live, you want to enjoy life, so treat yourself every so often.
Of course.
But plan for it. What I would do is encourage people to not take out loans for as long as possible and actually save for it or plan for it financially so they're not out of pocket. That means it will cost them as little as possible. But what I really want to talk about now, Greg, is tackling your bad debt. Seriously, we as Australians, we love to accumulate debt. We love to borrow money. We like to keep up with the Joneses. Hey, the Joneses have this. Let's get this too. Upgrading to a bigger TV all the time. And hey, look, guys, there is nothing wrong with that. But at the same time, you've got to plan for it and not do it all the time because it would set you back financially.
Can't we call it challenged debt or something? You know, instead of bad debt, it's got, you know, challenged debt.
It's just that unfortunately, when you take out these loans and spend without paying it back, it is actually bad debt because it's costing you more money in the long run.
True.
And it's costing you your financial future. You can be short-sighted about it. Look at it short term. It's like, I want it now. But at the same time, you risk your long-term gain for short-sightedness.
That's the trap that we fall into, which is we want it now. Of course.
Exactly. And some of the most important things that people need to do is to look at paying. If you have to get these loans, then get it with as low as an interest rate as possible. Pay it off as soon as you can. That means paying off more than the minimum. And look at how you can actually save and avoid just getting these loans altogether.
So have a strategy.
Have a strategy, correct, guys?
Absolutely.
Yes.
So what's the top bad debt? Would it be, in your book, is it cars? Is it, you know, just consumerism? What is it? Because, you know, what I'm leading to here is the home, okay? Now, people get confused about the home. Is it good debt? Is it bad debt?
The thing is, the home is like an in-between debt because you live in it, so you have a place to live, and it's one of those necessities in life that we all need. We all need a home to live. But at the same time, it's not making you money straight away. You're not getting cash flow, money in your pocket, but it means you can live in it, and it will still go up in value every 7 to 10 years.
Well, assuming that it does.
On average, it does in Australia.
Well, unless you're renting rooms out or something like that. But who wants to do that? In your own home, you want that to be your abode, your sanctuary, where you enjoy life. You know?
Absolutely. But you know what? Some people really enjoy renting out their rooms to international students or to meet people from all walks of life. So it helps them fulfill two things. They get to meet more new people and have more diverse experiences and conversations. The second thing is they get income. That's how you turn a debt that's kind of in between bad debt and good debt into a good debt. You get to live in it and you get an income for it. It's a win-win. It's the best of both worlds.
Correct.
Yeah.
Correct. Okay, so avoiding the fact that you don't want to rent the room out or rent out part of the home, for the average family, I guess it comes down to, you know, if the value of the home is increasing, I guess it sort of is good debt, right? Because there's equity.
Yes.
But if the opposite happens, well, is it bad debt or is it good debt?
The opposite.
Is it if the value of the home decreases?
Oh, if the value of the home decreases.
Which is unlikely.
It is unlikely, but then it becomes a liability.
Of course.
So it's great that you get to live in it, but at the same time, if the value of the home goes down, then it's actually it starts to be worth less than what you paid for it. And it's not something that generally happens in Australia, but in other parts of the world it does, like the United States of America.
Which recently happened.
Yes, it recently happened with the GFC, and that's something that we talk about. We do not talk about on the show that often, but Australia is one of the most secure places to live in the world. We are actually relatively unaffected from the GFC compared to the rest of the developed Western countries, and we have one of the most secure banking systems in the world. In the world, Greg.
Of course.
Yes, and people forget that we have this wonderful lifestyle, this wonderful country. We really are the lucky country. So many people want to live here with us, and that's why our population will steadily increase, and that will ensure that your home is worth more, at least double every 7 to 10 years, as long as people keep wanting to live in Australia, especially in Melbourne.
Fantastic. Great commentary. Right. All right, we have to go to a break. So you're watching the Mortgage Busters show, and we'll be back momentarily. You're back with the Mortgage Busters show. Rain, we're talking about bad debt and tackling it.
Yes, we're going to talk about one of the big taboos of Australia, credit card debt. So Australians rack up more credit card. We're rivaling our counterparts from the United States of America.
Can I just interject for a minute?
Yeah, sure.
I mean, I was at the supermarket the other day,
Yeah.
and I was just waiting for the client in front of me, or the shopper in front of me.
Okay.
And she opened her wallet, and there was must have been 10 credit cards.
Holy
and that's
cow.
not uncommon.
Wow.
There's cards all over the place.
Yeah.
There's probably discount cards and whatever, but I saw banks, it was I can't remember what they were, but you could tell they were credit cards.
Wow. Yeah, that's scary, isn't it?
It is scary. It's
Because
very scary.
especially when people actually use it and not pay back. Because when you can just take it and just go, hey, I'll just tap this or I'll swipe this, you actually do not realize you're actually using money every time you do it. It's like you're using free money, and
Correct.
that's what they want you to think.
Of course it
When
is.
I say they, I mean the banks and the credit industry. They want you to spend more money because they make money off us. So let's tackle it. Let's not give them our money. Let's pay off our credit cards as soon as possible. So then what can we do? We can pay off our mortgages faster. Don't we want that?
Of course it is, and that's so exciting.
Yeah.
It's invigorating. It's you're taking control. It's
Absolutely.
you're dominating. You're really making headway.
Absolutely. You got to step into your own power and take charge of
I
your
love that.
finances.
Step into your power. I like that.
Absolutely.
Yeah,
Do
yeah,
not
yeah.
let the banks get a hold of you. You get a hold of your finances, you take charges. So these are some of the things that you can do with your credit card. You can pay off the balance at the end of every month. So you can spend it, you can use it, because people do have a credit card to help manage their cash flows and for emergency.
Now, are you talking about the interest-free period?
Yes,
Correct.
that is correct. I am talking about the interest-free period. So banks usually have 55 days interest-free?
Correct.
And I would encourage people to always pay off the entire balance every month. Every month. If it's not possible to do that, then pay it as much off as you can, or not use it at all. Just avoid using your credit card unless you absolutely have to. And for those people who, unfortunately, when you give them a credit card, they'll just take it and go around to the shops
Of
and
course.
go crazy.
It's temptation.
It is so tempting. For those people, we always encourage, and for everyone, to keep your limits as low as possible. Why? Because it actually affects your credit rating. Now, just a fun fact, every year, some of the credit ratings agencies actually allow people to get a free credit report. I believe one of them is called Vita. Was it Vita
yes,
Advantage?
correct. Yep.
You get a free annual credit report, and that's how you can actually keep track of what your credit rating is doing.
Which is, for the viewers, it's VEDA.
That is correct. It is VEDA.
Yeah.
And what happens is then you can keep track of what needs to be repaired. It will affect your ability to refinance your mortgage. It affects everything that actually needs a credit check. Does that make sense?
Yeah, absolutely.
Yeah, absolutely. So
which really, if most people wouldn't have a clue about their credit rating or their credit history, or how it works, or what the information is that they can get.
Yes, that's right.
They have no idea and they have no control.
That's right. It's one of the ways that you can take back control.
Yes.
And empower yourself to a brighter future. You can check up on your credit rating, because guess what? Your bank will do that too. Your bank will make sure, and if you have a really high credit limit, it actually affects your ability to refinance your mortgage and get more credit. So if you want to, say, draw down on your equity to renovate or pay something else off in emergency, we do not encourage people to take out their equities just to spend on holidays, because that's what's regarded as bad debt, money that you won't get back. But we do encourage people that if you have somehow accumulated a massive amount of credit card debt, to please look at least rolling it over into a 0% credit card with a 18 to 24 month interest-free period, and really aggressively paying it down. Or if you are interested and you are considering refinancing, you can actually debt consolidate. We were just talking about,
of course,
paying off all your debts quicker, faster. You can do it all in one foul swoop. Now, what the advantages of that is that you have it all in one place, and it makes it easier to manage and keep tabs of. And not just that, you can get a lower interest rate for your loans. So if it would be a lower interest rate than what you would get with a personal car and a boat loan, and also help your credit rating at the same time.
Now, with that, the Vita Association or whatever it is,
yes,
I'm sure the last time I checked, because I did this a few years ago, you can actually subscribe to Vita,
yeah, you
and
can.
When someone checks your credit history or credit rating, or for whatever reason, if someone's made a purchase or they're looking to make a purchase like a car or a fridge or whatever the case, you get a notification from Vita that your credit rating has been checked.
Yes, and
now,
yes.
We need to check that that's still happening.
I do believe that.
I believe it is, but I think
we
just need to verify that. But it's pretty for the viewers. They can check online or
Absolutely.
go to Vita and they'll find that out pretty quickly.
Absolutely. You can just type in. You can just Google credit rating check, and you'll find a wealth of information available from the Oracle of Google.
Of course. And I can see that you are a Google fanatic. Yeah.
Oh, magic fingers can get you a lot of information.
It's one of the best things, I have to say. Google is really the whole world has changed around Google or the internet, and your ability to disseminate information and
obtain
be
information.
Empowered.
Absolutely. It empowers people to take control and be able to find things they previously weren't. The world is at your fingertips. And if you can look at the world that way, then you can actually and have fun with it. It'll be easy to take charge of your finances. You can make sure that you're looked after and take care of all your debts, eliminate them, pay off your mortgages as fast as possible, and plan for your future. Because you can actually have a future that you want, not living paycheck to paycheck, not based on what other people want for you, but something that you want. What kind of life and dreams that people can achieve if they just take charge of their futures.
Fantastic. You've totally pumped me up. All right, so at the start of the show, we talked about the thumbprint report.
We did.
We're about to close out the show.
Yes.
So just reiterate in terms for the viewers, the thumbprint report, what's the number? How do you get it?
Right. All the viewers need to do, all you need to do is just call 1-300-862-746.
And the number again is?
The number again is 1-300-862-746. Or you can email us on tmbshow.com.au.
So that would be info@tmbshow.com.au?
Absolutely. Or you can just go to our website.
Go to the website. Thanks, Wayne. We'll see you again next week.